Hey, everybody, this is Russell Gray, co-host of the Real Estate Guys radio show here with another edition of Boots on the Ground. And in this episode, we're going to be talking about agriculture, timber, food, and the place that can play in your portfolio based on the conditions going on in the world. And to help me talk about this is our resident expert, a man who's been in this business for a couple of decades, at least that I know of, Alex Wilson from Precious Timber. Hey, Alex, how are you?
Hey, Russell, I'm well. How are you doing?
Good. Excited to talk with you. We ran into each other way back in the day at some trade show, and I was wandering around the trade show booth looking for interesting people to talk to. I saw you standing there, and I listened to your presentation, and you made the argument that no matter what's going on with interest rates, no matter what's going on with currencies, no matter what's going on with the stock market, no matter what's going on with the economy, trees just grow. And I thought to myself, well, that's kind of like equity. Equity happens over time because of what's happening with the dollar. And, you go through price hikes and price declines and various things, but probably even more steady. So for folks who don't really understand your background, I know you've been in this business for quite a while. Just give us the nickel tour about how you got into this business and what you're doing today.
Absolutely. So kind of backed into it, actually. Did start looking at Central America as a place to vacate and enjoy. My best friend, Ken Ross, who became my business partner, ended up living in and staying in Nicaragua once we started our business. So we're talking 1999, 2000, the early 2000s. We got I think it was a mail order magazine or article that came through my mailbox talking about how Nicaragua had the opportunity to possibly become like Costa Rica. And of course, there's a lot of history in Nicaragua, and the US. It's been up and down. It's had its good times and bad times, but in 2000, things were starting to level out, and the prices of real estate were kind of crazy affordable. So we took a trip down just to see how it was. Ken had already surfed there in the late 90s. He knew it was a beautiful place with great people. We were kind of shocked, to be honest with you. I mean, it is stunningly gorgeous. Costa Rica right next door. Everything that Costa Rica has, Nicaragua has more because the country is 2.5 times larger. And we just kind of fell in love with the country, the people mostly. A little backstory here. We were walking through the town of San Juan del Sur one Friday evening after a meal, and there was a gang of probably 30 or 40 guys in the street, and we needed to pass by. And as we were passing by, Ken says, "Boy, this looks a little iffy." And I go, "Well, you never know." And then all of a sudden, out of the crowd, somebody shouted, "Hey, do you guys speak Spanish?" And I said, "Well, I have a little bit of Spanish." He said, "That's okay. I've just come back to Nicaragua from Miami. I was in Miami." Long story short, we were talking with those guys for, I don't know, a good half an hour or so. And as we got back to the hotel, we looked at one another and we said, "Did you hear these guys say that they all love their country, but none of them have a job?" There was no jobs. There was not a lot of economic movement. And it kind of stood with us for a while. And the next morning, I think we were walking on a beach and we kind of looked at each other and we said, we could create jobs. And so that's how it all started. Just a little luck about finding the place at the right time, getting to meet some guys that we knew that we could help and give them some work. And they in turn helped us. And our business back then was strictly coastal property. And one of our employees, Ugo, who's been our top manager now for 22 years, he was the one that told us about timber and agriculture. So really just lucky. We got big ears, we listened, and it's been a pleasure for 22 years.
So you went down there on vacation, saw how beautiful it was, got talking to some locals and saw an opportunity, ended up starting in real estate, but eventually gravitated over to agriculture. Is that what I'm hearing?
Exactly right.
Yeah. Okay. So talk a little bit about your journey in the agricultural space. We talk about this on the show all the time, and you've got this concept of real assets versus paper assets. And people are always trying to find a way to make and preserve wealth. And in an environment where the currency is collapsing, and of course, it's no secret that all currencies, all fiat currencies, eventually go to zero. The dollar has been on a downward trajectory since it was first reinvented by the Federal Reserve in 1913. And of course, there's been some ups and downs along the way, but mostly equity happens because the dollar collapses. And so people who understand that, especially towards the end of its life cycle, where it really starts to accelerate, make the move towards real assets, are interested in things like real estate, energy, farmland, precious metals. And so we've been talking farmland for the last 15 years, since the beginning of the run up to the great financial crisis in the wake of it. And along that path, we met you and some other folks. And so talk to us a little bit about what you've seen. It's been at least 20 years, I think, or so that I've known that you've been in this business. And of course, you before the great financial crisis, in the wake of the great financial crisis, through some political turmoil, economic turmoil, both regionally and globally. How has this whole journey been for you? What have you seen? What are some of the lessons learned for investors?
Well, it's funny. I was talking to someone yesterday. In fact, it's my daughter's boyfriend, maybe to be something greater down the road. He's 25. And he was saying, it's pretty strange that the economy looks like it's going to weaken. And I go, well, that's what economies do. They go up and they go down. I said, I remember when I first came to the US. I mean, it was just around the 80s, and we had a nice run in the 90s. And then all of a sudden, you got the tech crash in 2000. And I've never really been a big investor in the stock market, but I was always, hard assets. I like land, I like real estate, but moving into agriculture was completely, in a different field for me. So I did start to read a lot. In fact, I found a book called The Alternative Answer. It's a great book. It's all about in fact, the subtitle to the book is The Non-Traditional Investments That Drive the World's Best Performing Portfolios. So I started reading more, and all of a sudden, this asset called timberland has popped up. And as I start reading more and getting into that a little bit more, we all drive through the countryside, we go on vacations, and we see forests all over the place, but we don't really think of them as we're driving by. It's just a forest, it's just a tree. Well, most trees and most forests all over the world is privately held. It's not government owned. It's private families that have been in the space for decades and decades, and generations and generations. And of course, they're generally the uber wealthy. And so for the average investor, where we're kind of moving and swimming in waters where financial planners are operating on our best behalf, it's really not an asset that most people are aware of. And so it took a little while, to be frank with you. In fact, if it wasn't for Hugo, as I said, that shared with us that, hey, you guys are building all these houses and you're using all this wood, because in Nicaragua and Central America, most people want that beautiful wood, that mahogany and that teak. It's a great feature. He goes, why don't you start planting teak trees? It's like the light came on. Of course, if we're going to if we're going to grow it and then be the end user of it, maybe we can make a higher percentage on our investment. So we started to look at that. And of course, the first thing that was shocking was you have to wait a long time, and not really understanding the benefits and the merits of that. Because if you have something like, you maybe spend $5 or $6 planting a sapling, and then it costs you maybe $1 or $2 every year to maintain it, all of a sudden 20 years goes by, you've only probably spent $25 or $30 on the whole thing. But the wood, the inside the tree at that time is worth $300, $400, or $500 per tree. Wait a second, those ROIs, those numbers are astronomically high. And so we just, as I said, we fell into it, and we've been in it ever since, and we've been planting every year since. And as we introduce this to friends and relatives and people we met and investment conferences, we've been just sharing the message that timber is one of those asset classes that's really not very, very well known, but for those that know it, it's absolutely stable in their portfolio.
Yeah, well, I think anybody that's been paying attention over the last few years in the real estate space has seen the huge spike up increase in the cost of lumber. So we all get the value of timber. When we think of it as an investment, you've got mining, which is where you go pull something out of the ground and you take it and it's gone, whether you're pulling out gold or energy or whatever it is. You have farmland where you turn over a crop every year. You plant in the planting season, you harvest in the harvest season, and you sell the produce, and you have a management, you have a cultivation in between. But the life cycle, the turn cycle, is pretty tight, and it's nice from a cash flow perspective. Of course, a lot of those crops are a little bit more frail, and you don't have the benefit of time and inflation working for you, so kind of smoothing out the economic cycles. One year, your crop can boom and the marketplace can give you a nice profit. Other years you might have a bust where you have to sell at a loss. And so, there's a plus side and a negative side to the volatility. It's just like in the stock market. People say, "Oh, the stock market's great because it's highly liquid." Yes, but the stock market is also very volatile because it's highly liquid. So you look at something like real estate, where there's a lot of friction to get in, the hold time is a lot longer, and a little bit of friction to get out. But in between, equity happens. So I liken timber investing, long-term agricultural play. It's a renewable resource because you can plant and then harvest and plant again, but it's also a slow grow, which smooths out some of those cycles. And I think, to the point we raised earlier, and the thing I learned from you in the very beginning when I first met you, is that these trees grow no matter what's going on in the world. And so there's no obligation to harvest them because they just continue to mature. If you are ready to experience some reversion to cash, you're going to convert your commodity, the timber, to money by selling it, and the market isn't conducive to it. You're not going to lose the crop if you wait another year or two until conditions are better. And that's unlike other types of farmland. So talk to us a little bit about the state of the union right now. I mean, I know that, we obviously are seeing commodity inflation pretty much everywhere. We've already seen supply disruptions with respect to lumber. You're operating on an international basis, obviously not here in the United States, but in Nicaragua and maybe other venues. So what are you seeing in terms of the market, pricing, profitability for people? What's happening kind of today in the timber market, and where are the opportunities?
Yeah, in Central America, particularly because it is very high value, hard, very dense tropical woods, and not just, the regular stuff that we use, 2x4s and stuff here when we're building a lot, especially in Southern California where I am. I mean, it's all 2x4s. And as you pointed out, I mean, obviously the cycles of the economies and stock markets and money. I mean, one of the nice things about timber is, when prices are low, you just sit on it a little bit. And when prices are high, like we've just had for the last 2 or 3 years, it doesn't matter what size the tree is. I mean, if the tree is half a normal tree for us, for what we call the optimal harvest size, is about 18 inches in diameter at breast height and 24 feet on a log. There's about 190 board feet of lumber in there. But if the price of lumber is doubled or tripled, you can actually sell trees that are much smaller. So instead of it being a 20-year wait, it might be a 12-year wait. And so there's a lot of flexibility to that. And of course, what's happening now all across the world, and I don't know, that many people are seeing it because it's not really advertised or reported about, but there's many places across the world are starting to go from steel construction to lumber construction, because now we have all of these different species of woods and they're laminating them together and putting them together. And I'm talking about high-rise buildings, not just 2, 3, 4, 5 stories, 20, 30, 40, 100 stories and more. Lots of that is already happening in Europe, and especially in Scandinavia. So wood today and the next 20, 40, 60, 100 years is really going to come into play even more so, because we're taking away as much steel as we can and putting it into quote unquote sustainable assets and sustainable products such as timber. So I think we're going to see across the next 20, 30, 40 years, we're going to see more people, first of all, educate themselves about timber, get it into their portfolio, and enjoy the returns that we expect to see.
Yeah, that's actually quite fascinating to me. I would have considered steel and timber to be apples and oranges, but and I totally understand the drive towards sustainability at the macro level. I don't think it's any secret the United States steel production capacity went way down, and we exported a lot of that steel production to China. And of course, is if our relationship with China deteriorates and they decide, hey, we don't want to sell you guys any steel, then technologies, not just from a sustainability perspective, just from an availability of the raw materials perspective, if timber can step in and replace some of that steel, that might even be some additional pressure based on what's going on geopolitically. I would never have thought of that. I'm so happy to be able to do these interviews and learn this stuff.
Yeah, also for climate change too, because if you think about the way we need to sort of make sure that the heat of the earth that we live on and the temperature changes. I mean, all of the carbon dioxide that a tree basically inhales, if you will. I mean, the whole idea is the more trees that we can cut, the more carbon dioxide we can intake, because we're planting again. It's a reforestation process. Everything that we cut, we replant. Everything that we cut, we replant. And so the more trees that we can cut down, the better, not the less trees. The more trees that we can cut down, the better, because the more trees will be planted. And that cycle goes on depending upon the type of trees and the species of trees. But for us, it's a 20-year cycle, 10 to 15 to 20-year cycle. And so it really does help, overall climate change too.
Well, let's talk a little bit about understanding how the investment goes, because like real estate, you don't have to buy a property when it's first built. You can come along and buy it after somebody else has owned it for 10 years or 15 years, and they decide for whatever reason they've had their run and they would like to get out. One of the things that I was happy to hear is that really the same thing is true with timber. You can buy in at the beginning and be part of the planting and capture whatever amount of appreciation occurs during that growth period, literally, from the time it's a sapling until it's maybe a small tree. But you can invest in a more mature crop and have it be closer to where you're actually going to get out. So the liquidity isn't just at the harvest, it's really at any point in time along the way. Talk a little bit about how that works for investors.
Yeah, we certainly start with the real estate itself. I mean, especially agricultural real estate, farmland, timberland. I mean, those are we're not getting any more of it. We're getting less and less of it. Of course, the higher the population grows globally, the less and less.
And there's a couple of billionaires out there that've been stocking up on hundreds of thousands of acres of farmland. So yes, it's getting more and more scarce every day.
It's kind of shocking to see the prices that people are paying, especially in Europe and the US. I mean, we're not talking, prices that you would ever dream of unless you're really in the space, but 40 and 50 and 60 and $100,000 per acre. In Central America, it's a lot less.
So in this case, Alex, sorry to interrupt, but are you saying that the investors actually own the dirt and not just the trees?
Yeah, we recommend that, because as the years go by and you watch your trees get larger and larger, the value of the land is increasing too. And so you do have a double-sided sort of benefit there. We obviously choose countries that are focused on, owning the wood. We want to be leasing. We want to own the dirt. We want to work with countries that allow us to own fee simple real estate. Nicaragua, Costa Rica, Guatemala, countries like that. In South America, there's a lot too. So first and foremost, we recommend own the dirt, because if you're going to have a 20-year, asset, 20 years later, you want to also pick up the benefit. If obviously the benefit is to replant and pass it on and pass it on and pass it on if you can. It's a great historical legacy, if you will, for families. But if you are not going to do that, you're going to be glad that you did own the land, because you might have paid $2,000 for it when you started, and it's worth $7,000 today, and all you did was just wait for the actual asset itself to mature. So yeah, start with the land, start with the fee simple property, then obviously get someone that knows what they're doing, planting it correctly, spacing is correct, making sure that a tree needs to grow as straight as it can. They're not all straight. I mean, they're not all exactly straight, but people, experts that know which branch to come off at which time, so that you can get a straighter log. A straighter log is more value than one that's bent. It's a pretty simple, I mean, there's not a lot of maintenance after the first 2 or 3 years once a sapling is in the ground. And what we do with our clients, in any event, the first 2 years, we guarantee any tree that didn't make it properly, we're just going to go ahead and replant it for them. But after 2 years, I mean, a tree is going to do what it's going to do. It's going to grow quickly when the sun shines and the weather's are right, and it's going to slow down in the season that it doesn't need to. But at the end of the day, you know that you've got the dirt and you've got the asset, and at any time during the full cycle, you're in full control. If you need the cash earlier, if you want to wait later, it's all up to you. We're just there to manage it for you.
So really what you got is just like owning an apartment building or anything else. You buy a piece of dirt that's got an improvement. In the case of a rental property, it's the property or the building itself that you rent out, but it sits on top of a piece of land. In this case, it's trees. And over time, those trees grow, whereas your fourplex or whatever it is, your rental property doesn't really grow. But the rental income it may generate may grow. In this case, the value of the timber grows, not just from inflation, but because you're literally growing more product as the trees get bigger. Your cash flow comes from harvesting. And so there are going to be times along the way where you say, hey, I meant to get in this thing for 20 years, or maybe make it a legacy investment. We're going to have these occasional harvests where we see some cash flow come in, but it really sounds to me like it's a long-term preservation of wealth play. And then it's the opportunity, though, to exit at points along the way. So talk a little bit about that. I think most people who are watching understand the way real estate markets work, the way we think of real estate markets. I put my house on the multiple listing service, people come and buy it. If I own a piece of farmland in Nicaragua or some country and I want to get out of it, I mean, is there a market for that? Do you help make that market? How does that work if somebody's like 10 years in and decides, hey, I'm ready to step out, I want to get back to cash?
Yeah, I always start by saying, hey, if you're going to be in this space and you want to be in this space, you really should stay in the space. I mean, obviously things can change, and your life can go one way or another, and you need to make a decision on things. But you should really start with saying, hey, this is something that I'm going to hold for a 20-year period. Obviously, along the way, cycles of economies and people's lives change. And so, yes, we have the ability to help a client that needs to make a sale early, whether they want to sell all of it or some of it. We have other investors that are, they may be more mature. They're in their 60s and 70s, and they're looking for something, for 5 or 10 years before they can see some ROI. And so we do have, sufficient enough in-house clients and those that contact us on an annual basis, weekly and monthly basis, to be able to say yes at the time in which that's convenient for you, whether it's forced or whether it's just by the fact that you hey, I woke up this morning and I think I want to sell my trees. We can do that. We can help you access clients. Obviously, it's not as quick as the old mouse on the computer next to you. And it may take us several months at some point in time to find the right buyer. There's also a lot of in Central America, because that's a great region for this kind of species of trees. There's lots and lots and lots of fabricators that are into all kinds of different furniture applications. They're US owned, they're European owned. And so a lot of times, some of those big mills and big manufacturers and people like that are always trying to hedge their prices and, buying at a good price, knowing that we're probably going to keep the trees in the ground for another 5 years ourselves. So there are many ways and many options for us to help a client that decides to become a timber owner. And then at some point before the cycle would normally end, they need to, have a decision made and say, hey, can you get me in or can you get me out?
Yeah. Okay. So, and like when you own real estate, you get depreciation. Obviously, you're not going to get depreciation on something like this. So the argument against holding real estate in your retirement account is you can't use any of the tax benefits. But in this case, it seems to me, correct me if I'm wrong, but this might be an ideal type of an investment for a retirement account. If I'm in my 30s and I've got, been kind of working for the last 10 years and I've built up $100,000, $200,000, whatever it is, my 401k, I'm nervous about the stock market. I'm still a long-term investment. Real estate would be a great play, But our good friend Tom Wheelwright says it doesn't make a lot of sense to put real estate inside of an IRA because you have lost the tax benefits and now the capital gains are going to get taxed as ordinary income. But this could be a great long-term investment, a 20, 30-year investment for someone in their 30s that's not thinking about retiring until 60 or 65 or 70 years old. Do you find a lot of people use it that way, Alex?
I do. I think over the last 20 years, I found though that the 30s and the 40-year-olds I mean, to me, I didn't find it until I was, 45 or 50. And as soon as I, realized, oh my gosh, this is that good, then it was a no-brainer. But there's so many different things for people to invest in today. And so, I mean, it's harder. We found for the younger guys, for the
So
younger.
you're thinking somebody maybe 50 years old that's got a
50,
20-year time horizon to about 70?
Yeah, that age group, 45 and 50, there's a little bit more. I don't want to say it and sound crazy, but a little bit more maturity. They've gone through the ups and downs of the investment world and lost a bit and won a bit and lost a bit. And so there's a little bit of,
Well, I mean, you've got people that have invested in the stock market, only ever seen a bull. They invested in crypto, only ever seen a bull. I think that you're going to have, depending on what happens as this market, as the Fed continues to raise interest rates, as we're recording here in May of 2022, that if the markets continue to be as volatile or in fact really implode, unless you're our age, and I'm probably older than you are, and haven't seen that lost decade of the 70s where the stock market went down, it didn't come back for 10 years. I remember in the dot-com bust of 2000, NASDAQ fell from 5,000 to like 1,700 or something like that. It didn't come back for 17 years.
No, you need a few bruises and a few black eyes before you can.
But when you've seen that, you realize, okay, you know what? There's a chunk of my portfolio I would like just to put it as something that's solid, that's real, that isn't going to be volatile and subject to the economic whims of what's going on geopolitically or with interest rates and Fed policy or government spending policy. Doesn't care what the unemployment rate is, doesn't really care about any of those things. It's just going to grow. And it is a fundamental, essential commodity. It's something that has been needed and used by human beings for thousands and thousands of years. That is not likely to change. And the interesting tidbit in this interview that I thought was so interesting is the fact that people have found a way to actually use timber as a replacement for steel in some applications. It's like, wow, I would have thought the opposite was what was going on, but that's really an interesting place. So we don't have a whole lot more time, Alex, and we could go on and on. I didn't want to make this a tutorial on what you did, but for people who have no idea, I thought that it was interesting to talk about timber, but you're also involved in some other commodities besides timber. Just give us kind of the nickel tour on some of those.
Yeah, so we were very big into the coconut space back starting in 2014. We started to see that the coconut, craze, if you will, it was a coconut water, and then I thought that craze would kind of go away, but not only did it not go away, it got bigger and bigger and larger and more global. And then nowadays, you can't even walk down any aisle of any supermarket without seeing coconut in all kinds.
No, I'm Captain Coconut, right? Coconut water, coconut oil, MCT oil. Obviously, eating coconut is great, but I saw a study or something, a report one time says that was just the amount of uses for coconuts. It's amazing. It's amazing. I've never seen one commodity or one anything that had so much utility. Coconuts are fascinating.
No, in Virgin Atlantic, even they did a little test on flying, I think it was a 747 with coconut biofuel. And so you're right, the applications are endless. And what's nice about the coconut space, I mean, it's still land, you own the land, and it's still a tree. It's just not lumber, even though after 60 years of growing, you can cut the coconut tree down, and it's kind of a nice lumber too, but not exquisite. But you have a 60-year annuity here. Takes about 4 or 5 years for the trees to start producing coconuts. And then after that, they just keep on going year after year after year after year. On average, 150, maybe 200 coconuts a year on an annualized basis. Yeah. And, at an average price of 30, 35 cents. You have a nice mid-teens return coming off, spinning off annually. You do have to wait for the first 4 years for them to get there, but if
But then
you're
it's cash flow every
cash
year
flow
as
every
it's
year.
producing. So it's more
Cash
like a traditional crop.
Yeah, and we've just partnered with a group out of the UK that are in Guyana in Central America, and they've been in the coconut business for way longer than we have. And they've got a very, very large operation. They're also in the spice business and a lot of other things. And what I like about Guyana compared to Central America is Guyana is always wet. The rain comes down every single day. The sun shines too, but coconuts need a lot of water. And so they've got a tremendous operation there. In fact, they have an offering coming up pretty soon. But I would say, for the investor that is interested in the agricultural space, needs a little bit of education, get deep. And there's a lot of stuff online. Of course, we can always, I can always have a conversation with someone. It's not for everybody, but for someone that does like the idea of having some of their assets, switched into agriculture and long term, and whether it's an asset like the coconut that spins off every year, or whether it's timber that just is once in a blue moon, it is something to be seriously considered, because at the end of the day, you've got the market and you've got Mother Nature, and I kind of like Mother Nature a little bit more than the market.
Yeah. So I actually am just looking something up real quick because I believe that you provided us some information. And so if people are interested in learning more about Alex and Precious Timber and what you guys do, send an email to timber@realestateguysradio.com, timber@realestateguysradio.com. We'll get you the information you need. You can connect with Alex. I'm sure he has all kinds of information. I know that I've seen you present over the years. You're a great teacher. You're patient. You explain to people. But I think this is a niche worth taking a look at, obviously, because I'm spending time getting to look at it now. And I've been following you for a long, long time. You've been in and around the Real Estate Guys tribe for quite a while, and on the seminar circuit where we often see each other at the conferences. But agriculture, it's no secret that people are always going to need food. They're always going to need lumber. And when you realize what's going on in the financial system with the currencies, with the credit markets, and ultimately the stock markets, this can be a place where you can find some long-term stability, a great long-term hedge against inflation. It's a little bit off the beaten path, but it isn't that complicated to understand. And then what you just have to find is somebody like yourself, Alex, that's been in the game for the last 2 decades, has the relationships, is willing to take the time to introduce you, and has vehicles through which to share the opportunities with investors. So really appreciate your time today. Looking forward to spending more time with you and getting more updates as we cruise along. But folks, if you're out there and you're interested in learning more, just send an email to timber@realestateguysradio.com. Alex, thanks so much for your time today. Really appreciate it.
Always a pleasure to be with you, Russell. Thanks a lot.
Thank you.